a few slides on blended finance. I think we will spend the first 5-10 minutes just going through the slides, and then I will introduce our panelists, start with the Q&A, and open it up to all the participants to ask their questions directly. Gladys, if you could please share the presentation. Thank you. So the purpose of this call is to explain what blended finance is, but more importantly, move to the discussion that will follow to see how companies could use the mechanism to improve the... Sorry, can you hear me?
Yes.
Yeah, okay. To improve the attractiveness of their business proposal and raise more funding. So moving on to the first slide, what is blended finance? Gladys, if you move to the slide 2, blended finance is, next slide. Blended finance is the strategic use of development finance. When we say development finance, these are donor governments, agencies, multilateral donors, philanthropies, and other players in the sector. So we use the development finance for the mobilization of additional commercial capital and finance towards sustainable development. So that's important. So the project in itself needs to make commercial sense. But initially, there is this need to use in some instances, a blinded finance instrument to attract more private capital, whether private equity or venture capital or commercial debts. When we look at the numbers, blended finance has mobilized over $160 billion globally towards sustainable development goals in development countries. Moving on to the next slide. What are the core principles of blended finance? I'll move very quickly, but we will have the opportunity to discuss this with our distinguished panelists. There are like 5 key core principles. The first one is maximizing the development outcome. So it's a balance that needs to be found between development outcome and financial risk and returns. The sustainable development goals are at the core of how and why this development finance institution use the blended finance instruments. And the other key question when we ask ourselves if we are maximizing the development's impact is the project committed to the highest quality standard, yes or no? A second core principle is the additionality and crowding in of private capital. Again, the intention is not to fund the whole project as with the grants or with zero interest loans, but to create an incentive so that private capital can come in and inject debts or equity or other instruments into the projects. The third principle is reinforcing and supporting local markets. So whatever instrument it is, it's not one size fits all. It needs to be adapted to Peru in this instance. Core principle number 4 is the appropriate allocation of risk between the commercial partner and the development partner, with always the aim of 1, scalability, and 2, sustainability. And when we talk about sustainability, I always remind like the companies and projects developers that to be sustainable, a project needs to be profitable. And you cannot, if you feel that you need this blended instruments forever, there is something that might not stack up in the project. But as long as it's for a transition period to start the project, to attract capital, but at some point it makes commercial sense on its own, then it's a good candidate. And principle number 5 is the transparency and the promoting of high standard. Again, like it's important to ensure accountability on the appropriate use and value for money, especially when it comes from development institutions that are using taxpayer money. Moving on to the next slide. This one is very quickly, it's just a summary of what we've just said. So it's leverage, like the key characteristics. So we are trying to put like $1 maybe of grants or blended finance and be able to attract up to $4 from private capital. Impact, so we need to be able to measure this social, environment, and economic impact, and return, to make sure that whoever is investing, they get like a return proportional to the risk that they are taking in the project. The next 2 slides, I will take them one after the other, is some examples of the blended finance objectives. There are multiple examples, but here I just give 3 examples, and we will see more of them in the following slide. It could be, the objective could be to lower a project required return. So by adding, for instance, a concessional tranche or having an investment grant. In some instances, it could be subsidizing interest rates to allow the projects to fundraise and to get to the right target returns and attract private investors. It could be to improve the project risk profile. And we've seen that, for instance, with risk mitigating instruments, loan guarantees, or first loss pieces. And probably Jorge and Joanna can give us some example of this first loss layer that could be provided to enhance the credit profile or the risk profile of the project. Or it could be in the form of technical assistance and technical need. Moving on to the next slide. The next slide, again, it's just like the instruments that are used. As I said, it could be a loan guarantee, it could be technical assistance, it could be investment grant, it could be a first loss piece, or it could be a subsidy, for instance, of the payment of the interest rates. The next slide are an example of some of the key players in the blended finance. You could see on the right hand side that the larger contributors are development agencies and development finance institutions. That being said, there are many other players, including foundation, impact investors, Jorge is joining us from Bamboo Capital, who are an impact investor, and he can give us some example of how they use blended finance. Moving on to the next slide, this is a sector spread of the key recipients. You can see that most of the sectors are candidates for these instruments, but 50%, I would say, goes to energy and financial services, with increasingly more going to infrastructure and healthcare. The next and last slide is a breakdown by country. Here we can see that there are some countries, like if you look at the top 10 countries, maybe they are all in Africa, but the recipients are all over the world, including India. You can see the last country here is Mexico, receiving 5%. Peru is lower than that, but it just gives you an indication of who have been the recipients of blended finance last year. And with that, I will close the presentation. This was just like a quick 15-minute intro to set the scene, and I would ask our esteemed panelists Jorge and Joanna to turn off on their camera, and I will start by handing over to Joanna to, if you could please introduce yourself and your institution and your role in your institution.
Hi, everyone. My name is Joanna Montalbán. I switch in Spanish, please. Nosotros trabajo en Banco de Desarrollo del Perú. Trabajo en el Departamento de Financiamiento de Infraestructura, financiamiento de proyectos verdes, en específico proyectos de energías renovables y eficiencia energética. Hemos financiado a lo largo de estos últimos casi 10 años más de 15 proyectos de un monto de inversión de 600 a 700 millones de dólares. Y pues nuestra parte es financiar básicamente en porcentaje, un 50% del financiamiento. Y pues nosotros dentro de nuestros proyectos tenemos proyectos principalmente de energía, pequeñas centrales hidroeléctricas de 20 megas y también paneles fotovoltaicos. Tenemos un proyecto muy interesante en el cual es brindar energía a zonas aisladas que no están conectadas al sistema eléctrico aquí en Perú. Es uno de los proyectos más emblemáticos que tenemos dentro de la institución y trabajamos muy cerca con las principales de este proyecto. Empezamos con ellos y luego este mismo sponsor, no sé si me llegan a escuchar correctamente.
Se corta un poquito. Joana, se corta un poquito la voz.
A ver, espérenme que me conecto un poco de... A ver, déjenme ver si me puedo conectar desde la máquina.
Sí, Joana, muchas gracias. Más bien, Jorge, quizás te puedes presentar tú y de ahí pasamos de vuelta con Joana.
Sí, claro que sí. ¿En inglés o en español? Como prefieran.
Mejor en español para que todos los siguientes escuchen y luego hacemos el panel en inglés.
Perfecto. Bueno, buenos días con todos. Un gusto estar con ustedes. Mi nombre es Jorge Farfán. Yo soy el director para América Latina de Bamboo Capital Partners. Bamboo Capital Partners es un fondo de impacto suizo. Tenemos 3 sedes regionales. La que yo lidero está en América Latina, en Bogotá. Hay otra oficina en África y hay otra oficina en Asia. Nosotros hacemos inversiones de impacto, como bien lo comentamos, como acabo de comentarlo, diferentes sectores. Empezamos en banca, microfinanzas, en energía, en agricultura y en el mundo tech. También tenemos inversiones en fintech y tenemos inversiones en el mundo de energy tech. Tenemos un rango de sectores e incluso hemos tenido un fondo que ha sido multisector a nivel global. Invertimos desde México hasta Argentina, no tenemos ninguna preferencia geográfica exacta, es más bien buscando las oportunidades donde creamos que pueden haber impacto. Claro que por algunos sectores, algunos países serán más preferidos que otros, y entonces, bueno, trabajamos con varios fondos, como les comento. Digamos, esa sería mi introducción corta. Gracias.
Gracias, Jorge. Si te parece bien, traduzco rápido al inglés para Sara. So, as Jorge mentioned, he is director of Bamboo Capital for Latin America. Bamboo Capital is impact investors. It has offices in Africa, Asia, and Bogota. They do impact investments in different sectors, including microfinance, energy tech, agriculture, and they also have funds that are multi-sectorial. They invest from Mexico to Argentina without having a specific region in which they operate, and they just work with different funds. Y veo que ahora, Joana, ya estás conectada. ¿Quieres
Sí, no sé
poder
si me logran escuchar bien.
Sí, ahora perfecto, sí.
Perfecto, más bien disculpen el inconveniente técnico. Bueno, retomando, como les comentaba, nosotros somos el Banco de Desarrollo, somos un banco de segundo piso. Esto quiere decir que nosotros fondeamos nuestros recursos o nuestro impacto lo canalizamos a través de las instituciones financieras, ya sean bancos, financieras, cajas, cualquier institución dentro del sistema bancario aquí en Perú. Nosotros dentro de nuestro accionar buscamos que efectivamente nuestros proyectos a los cuales tenemos un apoyo tengan gran impacto, básicamente en la parte social y en la parte ambiental. A lo largo de nuestros 10 años, básicamente hemos podido financiar más de 15 proyectos, en total de $700 millones. Nos hemos enfocado mucho en energías renovables no convencionales, pequeñas mini centrales, más o menos de 20 megas, y también en las tecnologías fotovoltaicas, en las eólicas, ¿no? Tenemos, como les comentaba, un proyecto muy interesante en la cual se puede revisar o se puede ver mucho el impacto. Es un proyecto fotovoltaico, más o menos de 170.000 paneles, en la cual eran instalar paneles en zonas aisladas, en la cual potenció mucho la inversión porque era entregar energías a personas que no los contaban. Llegando al punto de qué es lo que podemos hacer o a qué proyectos podemos apoyar, es básicamente proyectos que tengan este gran impacto. Eso es lo que funciona bastante para nosotros, dado que somos un banco de desarrollo. También, sí, considerando que somos un banco de desarrollo del Perú, sí, nuestra inversión debe estar canalizada en Perú, localizada en Perú. También no tenemos monto mínimo, tenemos sí un monto máximo de más o menos $100 millones para proyectos de energía. Y en tema de plazo somos muy flexibles, podemos dar financiamiento en dólares, en soles, podemos acompañar a la banca en muchos esquemas para poder hacer accesible o poder hacer financiable el proyecto. Entonces, es básicamente, nosotros estamos muy interesados en apoyar este tipo de proyectos. También, como les comentaba, nuestra experiencia es más en energías renovables, pero estamos focalizados a ampliar nuestro abanico de oportunidades de inversión y de acompañamiento también al sector de energías renovables, que quizás es tenemos un mercado un poquito incipiente, pero nosotros también como Banco de Desarrollo queremos potenciarlo, ¿no? Para ello también hemos concretado líneas de financiamiento muy atractivas que puedan hacer que este fondeo sea canalizado a través de estos proyectos. Y encantada de poder atender cualquiera de las consultas.
Muchas gracias, Joanna. Bueno, lo pasamos al inglés. Well, Joanna works in COFIDE, that is a development bank in Peru. They really invest in projects that have a significant impact in social and environmental aspects. Over the last 10 years, they have invested in over 15 projects for a total of $700 million. They're mainly focused in non-conventional renewable energy projects, and usually projects that are like 20 megabyte size. They have this very interesting project that they have invested in, which is solar PV of 170,000 panels in isolated areas to connect those areas that are not receiving energy from the grid. And they only invest in Peru. They have no minimum investment and can be quite flexible in what type of currency the investment is requiring, if it's dollars or soles. And yeah, and they're looking to, even though they're focused on renewable energy, they're looking to expand the scope. So Sarah, we can go back to you.
Thank you. Thank you very much, Joanna, and thank you very much, Jorge. So we have with us today over 35 participants in a number of sectors, and I just wanted to give you like a high-level idea of what sectors are present. We have many companies in the solar sectors, solar photovoltaic or battery storage. We have with us also companies in the ecotourism. We have company working on circular economy and regenerative fertilizer, and other companies focusing on black soldier flies for the transformation of organic waste into insect proteins. So one of the key questions, and all these companies are raising anywhere between $5 million to $30–40 million. And one of the questions, and what would be very helpful for them, if you could guide them of your investment criteria. What is it that you look for when you are selecting a company to invest in? I will start with Jorge, and maybe you can, if it hasn't been done, sorry, in Spanish before, just give like a couple of examples of maybe some companies in the same sectors that you've invested in, but more importantly, what is it that you are looking for to select the best candidates and to invest in a company? And I'll start with that, and I will ask the same question for Joanna. And Jorge, is it, if you could also clarify, again, if it hasn't been clarified before, if it's just equity or if you provide equity, loans, and other hybrid instruments? Thank you.
Thank you, Sarah. Yes, we provide both of them. We provide equity and we provide debt. It depends on the fund that we're managing, because as I showed before, we manage different funds in different parts of the region with different profiles, with different things, because each fund has a different profile. And answering to your questions, I will try to separate this answer in two steps. The first one has to be more on the preparation of the company and how they present everything they want to present to any type of investor. And my first suggestion, because when I listen to the type of the projects that you were discussing and talking before, and I think that they are more quite related to the type of the mini small businesses, or some of them more on the startup process of those companies. So my first suggestion will be to be really very well prepared on how to approach and present the type of information they need to prepare to an investor. Usually, an issue happen to all type of investors. We receive a lot of information week by week from many type of potential companies in the market, in everywhere, not only in Peru. So I imagine that we have to take a decision on what to have a look or not at the first step. And sometimes the idea could be very interesting, the pitch is there, but then when you ask for more questions, you notice that they are not prepared. And unfortunately, that is, to be honest, most of the cases. That occur on most of the cases. And sometimes we cannot even talk about the specialties or the more, granular information on the project. So I suggest that you should be really well prepared with a pitch document, with an investment deck document, with with everything that is related, to be prepared with a small data room, with some specific information, basic information that the investor is going to ask, because otherwise, when somebody takes the decision to have a look on more detail, when you have that information, you lose credibility, and then it's very difficult to get that credibility again, to review whatever you are going to propose. So once this is more on the practical side, sometimes people don't react and don't say it, and don't look that this is very important. I will say that 80% of the processes stop just because of that, and not even because of to try to answer if the questions are, or if the project is good or not. The second part is where perhaps each of the funds, each investor should have an answer, right? And in our case, what we look is, first of all, that the project should be something that should be should have a very clear impact objective. For us, the impact means two things. That the company should have a return. Of course, we are not looking for a very high return. We are not a venture capital fund. We are not this type of funds. We'll look for some sustainability. We'll look for a return on debt if they have to repay the loans, or in equity if they have to bring that return to the equity investors. And at the same time, we look for the impact, social impact. What we say is also an impact for us is basically that the project should aim on how to promote the inclusion on basic services for people. So we look for inclusion on services for clean energy, new services or access to energy, on health, on education, on financial services, and also in agriculture. Those are our basic sectors initially. So the project should have a very good lens on any of those sectors, and how they guarantee that the project will, of course, guarantee again the access to some people to this kind of services, even though we are in a small country or a big country. We also, if the project doesn't that, but also improve the quality of access to those potential services, is also good for us. And especially it happens with the tech companies, when sometimes they are not solving the problem of accessing for first time to some of the potential community members. They're actually solving the project on how to improve the quality of access in terms of pricing, less operational costs, timing, etc. So we look for that as well. And once we have look on that part, we look for the scalability, and we look for trying to see if the project can have any scalability objective, because we, at the end, we are interested in showing that this is something that is going to help the community. It's not just only a good idea for us, for let's say for a 5,000 customer client in the financial sector, where 5,000 is very small. We try to be sure that this is an idea that is going to help thousands of customers. In that sense, we can guarantee some scalability and, of course, sustainability of the project and of the investor to get the money repaid, either by equity or by debt sense. So, and then, of course, we look for some conditions on the contract side. But I will say that this is just for the final part, but on the initial part, as you can see, is basically to be really prepared on having a very good idea, to defend the very good idea, and to show that it's having an impact in terms of number of potential community members, and in addition, in terms of scalability.
Thank you very much,
Paula.
Jorge. And I will ask the same question to Joanna. So before I ask you, Joanna, let me just remind all the participants, I'll be asking the next few questions, but whoever have a question, if you could please raise your hand or just drop it directly in the chat. If for some reason we don't have time to address all the questions right now, but at least if you put it on the chat, we can do our best to follow up and share the answer with all of you. So the key takeaway from what Jorge just explained are three elements. The first one is preparation. So it takes sometimes 3 months full time to prepare good information to have a 20-minute conversation with an investor. And he said something very important. It's very difficult once there is a decline and you lose credibility to come back and re-engage with the same investor. You cannot have a second good first impression. So all the work that we are doing to have the pitch deck ready, to have the summary, the information memorandum, the financial model, this is important, and that's the key for you to unlock those investments. The second element is the objective. So it needs to be to have a return, both a financial return and development, sustainability, impact return, and each investor will have their own criteria. I will come back to Jorge after that, maybe to dig a bit into the details of what it means depending on the instruments. And three is the scalability. And that's something that we've discussed in our 101 session, is how to move. When we say scalability, it could be moving from one region to the whole country, or from one country to a geographic expansion, or also how it could be applicable maybe in some sub-segments to have the largest impact on the communities. Joanna, over to you. If you could please also just clarify, when the project company approached you, is it just for debt? Is it for debt, equity, hybrid instruments? If you can just clarify that if it hasn't been clarified, and please address the same question.
Okay, Sara. Sí, en nuestro caso solamente podemos dar deuda, básicamente por nuestro accionar, y tenemos limitantes al ser Banco de Desarrollo. Luego, de alguna manera, pues coincido mucho con lo comentado por Jorge, de que efectivamente a la hora de presentar los proyectos aquí como COFIDE, sí es recomendable y da mucho valor el tema de que tengan un caso bien aterrizado, su proyecto bien aterrizado, porque la primera impresión cuenta. Por nuestro lado, como lo comentamos, pues estamos muy enfocados en deuda, lo que podemos hacer actualmente, pero igual estamos evaluando otras alternativas de participación, ¿no? Para poder llevar a cabo los proyectos, ¿no? En tema de sectores, eso sí me gustaría dejar en claro que no solo tenemos sector energía, sino en general cualquier sector en el que busquen cerrar esta brecha de infraestructura y que tenga un gran impacto social, ¿no? Y ambiental, principalmente.
Gracias, Joanna. Perfecto. Sarah, so as Joanna mentioned, at the moment they only provide debt, but they are assessing different options that they could provide in the future. What is key, as well as what Jorge said, is that the project has to be well articulated, because you can only make a first impression once, and that matters. And also that regarding sectors, is not only energy, different sectors can be covered as long as they're closing the infrastructure gap. Gracias.
Thank you. Thank you. So let's go back to what Jorge said about the return. And again, the same way investors spend a lot of time going through the selection to select the companies that fit their mandate, you as project companies need to do the same work to choose the right investors for you. So it's two ways, and it's a relationship that you are building because you will be together for a very long time. So Jorge, maybe if you could please just walk us through when you invest, for how long do you invest? What are the type of return that you are targeting? And in terms of process, like if the project company send you like a well-prepared pack today, in average, how long does it take in terms of process to go through the various investment committee, the due diligence, for them to draw on that facility? How long? Because that will guide them on to as to when to approach you. Thank you.
Yeah, regarding the first question on return, what we ask on let's say on an equity investment is usually the equity market return. And unfortunately, and this is perhaps not the right word, but we bring resources from outside Peru, so we bring USD dollars. We don't bring soles. This is going to make a big difference because for everyone here, if we bring soles, so then we don't have the exchange rate risk. If we bring dollars or euros, we do, and we have to cover that exchange risk as well, because we have to return the money in dollars or in euros. So let's say that's something that is that is feasible to get between 10-15% equity, depending on the type of the sectors and depending on the type of the fund that we are managing, on interest rates in US or in euros. This is something that we can have a look. It could be even higher if we are, let's say, working on a tech sector, but this is very specific on that side. On the debt side, the answer is mostly the same. It depends on the type of the fund, because we can have a very pure private sector fund dedicated to impact investment, that could bring us a specific return. We also can have a different fund that could be a blended finance fund that, as you mentioned, could have in our fund some catalytic resources, first loss resource, and in addition to some commercial investors that could request as well a different type of return, because we're looking for more risky returns, and perhaps we are going to request more risky returns as well, but at the same time with a more specific investors willing to accept that type of risk. So it's going to depend on that side, not a specific return, and we have to manage it depending on the type of resources we have and the type of the fund we are managing. Then the second question that the second question was about, Sarah. You mentioned
how long do you invest for, and the process from the beginning to the end.
Remember that usually investment funds, we have a period for investment. We are not, let's say, a commercial bank. We are not even a development institution where we can, and of course for them as well, should be like the same thing. But we have a mandate to do the operation as soon as possible, because we have to return the money after a certain period of time. So when we take the decision to make it happen, it should be very fast in our case. So once we take the decision to do it, it should, I mean, we try to push it for doing as fast as possible. So usually on average, once we start the due diligence and we finish with the signing of the contract, that could take us between 3, perhaps 4 months, the latest, depending on the type of institution, the type of due diligence that we are doing, and the type of complications what we are doing. Because sometimes we do it by ourselves. We are the only investor getting into the company, either with debt or with equity, and we can do it faster. Sometimes we are part of a consortium, some different investors simultaneously. That can take time for obvious reasons, nothing special, but of course it's different to talk just to the company, and then different to agree between the investors, the 3 or 4 investors, before making a proposal. So that takes time. So, and because every investor can have any specific question or request for to fulfill their obligations. So, but in average, I will say that between 3 or 4 months, that could be a good time to see something happening.
Thank you, Jorge. So before I move to Joanna, so there are like 2-3 key elements that stand out in Jorge's answer. The first one is Jorge clarified that they invest in dollars or euros, which means that also it would be interesting to understand, does that mean, Jorge, that you also only invest in companies that have some natural hedge where there is like some USD or euro revenue streams, or you are happy to take the FX risk? So if one of the companies generates just local currency, they could still come and see you.
Oh, in equity investments, we don't hedge anything because as long as I know, there is no any specific product to cover that. You don't know when it's going to, the return is going to be back, how much, the conditions. You don't know anything. Is very uncertain. Actually, you are taking all the risks, the counter risk that it means when taking equity investments. In that side, yes, we take. We do try to cover ourselves. We manage a coverage, a hedge. Sometimes the company says, I will cover it by myself for us. So they have some agreements internally with some investment banks in the country. Sometimes, and this is most of the cases, we do it with our hedge provider.
Thank you. One of the question, it wasn't clear when you said, obviously you have your investment period, harvesting period, and then you have to return the money to your investors. Some of the projects that are present today, they need very patient capital. How patient can you be? Are we talking about like a period of 10 years, which is like usually the duration of most funds, with some extension sometimes up to 12 years? Or can you stay in an investment for 15 years and above?
It depends on the product as well. If it is equity, usually we are an investment fund. Usually the investment funds receive the money in year 1, and we have to return the money back to our investors depending on the type that you have agreed in year 8, 10, 12, whatever. In our case, in our experience, the year 10 has been the case. So then it means like we have to return the money in year 10. So we are talking about equity. It means that we have to exit that. We have to sell this portion to any potential buyer at that time in year 10 and return the money back to our investors. If we are talking about debt, well, depends on the terms of the term loans. Unfortunately, I don't know if there are debt loans with a term of 10 years and 15 years, unless you are talking about project finance loans for highways, airports, and others. But if not, I will say that in my mind, an average loan could be 3 years, 4 years, and perhaps for the forestry loans and more the biodiversity loans. When I have heard about some of the investors talking about 8 years or 7 years, that is a lot of time as well. But I have not heard, and perhaps others does, terms more than those periods of time for a debt in this type of companies.
Thank you. And in terms of ticket sizes, before I move to Joanna, could you just give us an indication of what's your minimum tickets on the equity and debt?
Yeah, on the equity side, we are now shifting to the let's say to the venture capital side, where we can start with tickets for about $700,000 or $1 million, and usually we look for to be part of the Series A, Series B, Series C of the company. It means also to be part of the board, of course, to participate in any type of decisions at the level of shareholders. And that is more or less the ticket, and we can go up to, it depends on the company, it depends on the appetite, we can be much bigger than that. It could be 4, 5, or even more $1 million, depending on the type of the companies. We work with the small ones as well, but we can also work with some others, depending on the fund and depending on the appetite and the country, and the type of entrance, right? Because if we are getting into seed or Series A, the ticket could be lower. If we're getting into Series C, the ticket should be higher. That is the case. And in that side is the same thing. We are talking about $1 million to $4 million ticket. This is where we are having, especially in one of our funds, where we are having debt solutions, because in some others we only have equity.
Thank you, Jorge. So I will turn to Joanna. It will be the same question. Obviously, you invest only in debt. The idea is just to understand the process. When do you like companies to come and see you? We've seen, for instance, we've had some examples of companies spending a lot of time with debt providers before they raise the equity. So they waste like 6 months talking to a debt provider just to end up actually having a response asking them to get a minimum of 30-40% equity before coming back to them. If you can just give some guidance on when would you like to receive requests from the companies, if you have like minimum tickets, if there are like some key structuring considerations that you want to see when you are approached, and how much time does it take? Because sometimes we talk to companies and they believe that they can raise funding in 1 or 2 months. Is that reasonable, or you need to start like preparing those processes 12-18 months in advance? Thank you.
Okay. Thanks, Sara. En nuestro caso, por ejemplo, para empezar, sí nosotros manejamos una estructura de deuda capital de 80-20. En nuestro caso, ¿no? Para empezar. Luego, en el tema, básicamente, por ejemplo, en el tema de ticket, no tenemos un ticket mínimo. Sí tenemos como que un guía de un ticket máximo de $100 millones. Luego, en el tema de, por ejemplo, cuánto tarda nuestro proceso de aprobación, ahí, pues básicamente cuando tengamos cerrados el tema de due diligence, también hay un punto importante que recalcar, es el tema de que nosotros somos banco de segundo piso. Entonces, siempre, y considerando que también nuestro porcentaje de participación en la deuda tiene un límite del 50% si tiene una estructura de project finance. Entonces, siempre tenemos que ir acompañados de otro banco, otra institución financiera. Entonces, creo que no se escucha bien. Déjame acercarme un poco más. Entonces, ahí el punto es que nosotros debemos ir acompañados de una institución financiera, considerando los límites que poseemos. Entonces, una vez que tengamos consensuados los términos y referencias iniciales, tengamos los due diligence, el proceso de aprobación en nuestro caso puede tardar entre 2 meses, principalmente porque tenemos que ir a nuestros comités directorios y luego también considerando el monto de la participación de un 50%, tenemos que ir al directorio de nuestro accionista, que en este caso es FONAF. Entonces eso más o menos 2 meses en promedio podría tardar nuestra aprobación una vez que tengamos condiciones acordadas con el banco que nos acompañaría y también los due correspondientes, ¿no? Básicamente ese es nuestro proceso a la interna. Podemos manejar de alguna manera un proceso más expedito, pero va a depender de la información que contemos del proyecto, ¿no? Para poder hacer de alguna manera el análisis correspondiente y poder llevar a aprobación a nuestras instancias internas.
Genial, muchas gracias, Joana. So what they go for is a structure of debt equity of 80-20. They don't have a minimum ticket size, but they do have a maximum of $100 million. In terms of how long the approval process is, something that it's important to highlight is that they can go cover up to 50%. That's the limit in project finance investing, and they should go accompanied by another bank or financial institution. So once the terms have been agreed between this accompanying institution and them, and they have checked with the directory of shareholders, usually it can take an average of 2 months to get their approval. And sometimes it could be done faster, but that will depend on what information is available on the project size.
Thank you. Thank you very much. That's very quick, 2 months, but that's great. Like if the companies in Peru can get project financing up to 100 million in that short amount of time. We have 6 minutes left. I want to give the opportunity for at least 1 or 2 participants if they want to ask any questions. Anyone has a question, please just raise your hand. I can see Lucia Romero, if you want to come in and put your camera on and ask your question.
Hello, thank you, Sarah. I'm Lucia. Thank you for the conference and the presentation. It was all interesting. My question is for Joanna from the COFIDE, because I currently have my small company, which is focused on to develop some products and services focused on sustainability and renewable energy. However, we just started like in 2020, we have just 2 years of operations. My question for Joanna is if they are focused also in small companies, like called in Peru MICPES or micro and pequeñas empresas, which for sure have small capitals and probably also less experience in the sector. So that is my main question for Joanna. Thank you so much.
Gracias, Lucía. Sí, en nuestro caso, el tema, como les comentaba, era que nosotros debemos estar acompañados de un banco comercial. Entonces, nosotros, de alguna manera, al no tener un ticket mínimo, podríamos tener el atractivo, pero de alguna manera el inconveniente que vemos es que generalmente no es apetito debemos tener como que un banco acompañante y un apetito que tenga este banco por el proyecto y la empresa. Lo que recomendamos nosotros en este caso, considerando la experiencia, es de alguna manera contactar el banco que generalmente se está trabajando para que ellos, con base en esa experiencia o ese récord crediticio, podamos entablar y poder hacer de alguna manera una transacción mucho más rápida al tener este conocimiento por parte del banco o de la institución financiera.
Thank you, Joanna. No need to translate for me. Maybe let's give the opportunity for the last question, maybe for Jorge. Jorge, if you can turn on your camera and ask your question, please.
Good morning. My question is for Jorge. You say that 80% of the cases stop because the project is not ready and lost credibility. According to your experience, could you give a specific example when this happened?
Yeah, the example is when we get the approach, we get the contact from the potential entrepreneur, and we ask for information. And we usually, and this perhaps this is an investor language that perhaps is good to understand what the investor could wait for. And we usually ask initially for a pitch deck to understand what is about the project. Then we request an investment deck that is a document for 10-15 pages to describe the project in more details, especially with some calculations and projections. Then we ask for the projections. Then usually we can start a due diligence process, and we usually ask for some specific information about the project, the company, the owners of the company, and that is pretty much standard. And then, yeah, and I will say that very specific to this, and the preparation on those and that type of information. Sometimes we get we approach. They have a very good idea. They explain you how is it, but then when we have to support all and review everything, remember that in my case, I am not the only one who have to look at it. I have to share it with some people, with my risk manager, with my chief investment officer, and some other people around the world. So then when and everyone has to have a sense on what is all about, then it's sometimes when we notice that that project is not prepared to share the information. I'm not saying that the project is bad. I'm saying that perhaps it's just a problem of preparation on how to present the project and the information to potential investors.
So basically, Jorge, like the investors and as the second Jorge has explained, they received so many requests on a daily basis. In some cases, they have like 30 pitches on their desk on a daily basis, and they need to very quickly check if it fits their investment criteria. They are not there to follow up each of these investments and projects by sending like 10 emails to extract information. And I've seen situations where sometimes the information doesn't exist, or sometimes it's just like paranoia from some of the project companies. I've been in a situation where a project company told me, oh, I have all this information.
María, ¿cómo estás?
I'm happy to I'm happy to share it with you over the phone, but I'm not sharing anything with you. But as a person, as Jorge said, it's not just one individual making that decision. It goes through an investment committee. He will have to share it with other of his colleagues, like in other countries, and everyone needs to have the same understanding when they read that document. So it's very important to be able to summarize complex information in a simple way, put it like in one place, have a data room ready with the numbers and the financial model to back whatever you say, like with the contracts when they start the due diligence, and be able to support and justify every claim you have in the documentation. Thank you. And I think with that, that's all we had time for this session. It's been very, very interesting, and 1 hour is clearly not enough. If you have some burning questions where you would like Jorge and Joanna view, please do send them, and we will do our best to coordinate and to follow up with that. Thank you very much, everyone. Thank you, Joanna. Thank you, Jorge, for your time to be with us today and for this very insightful session. Thank you all.
Thank
and
you,
with
everyone.
that, I will close the call.
Thank you very much.